All right, so what I'm going to do is just walk you guys back through some of the training that we did back when we were in Sacramento. So first thing we're going to do is we're just going to start with a clean, fresh chart. We're going to take everything off just for ease of being able to see everything. There we go. We're going to expand this out here. And we're going to look at a 30-minute view. Jerry asked, with or without music? I don't think I'm going to be rocking out with a ton of music right now. So, all right, a couple things I do want to cover, though, real quickly. If you guys remember from when I was there in Sacramento, some of the levels that we had, remember, I'll just go back in time real quickly. This is what we were looking at when I was there, is we had some highs up in this range here. Remember, the very first thing we did is we drew our boxes, kind of on our 30-minute chart, kind of our extremes in price. And remember, it's an area, it's not an exact value. So we're going to start with that very first thing. So here we go. These are our boxes. These are kind of general areas. And then we always want to draw our eyes to the midpoint, kind of a halfway point. And what we're looking for is we're looking for consistent areas where certain things line up. So if you guys just take right here, you'll see, and I'll just put an arrow on here so you guys can see it. But you guys can see right here, here's a low, right? That then converts over to here, which is a high. You can then again see the same thing here as another high. And you can see right here as another high. And you can see right through here as another low. So when you're talking about kind of the midpoint, you want to draw your eyes kind of in between your boxes there, and you want to get a general area of where something may be. And then once you've got that, you look for consistent points in price. So I'm just going to come right through here, and I'm going to draw my midpoint just like that. Now you'll notice when I scroll to the right that midpoint acted as support yesterday. So we are now in this upper quadrant, or this upper range here in price. This having been support, so you could even, in a sense, almost do this. And say, okay, well, here's another level. And yes, we bounced off that on a 30-minute chart here. We're going to zoom this out here just so you can see the consistency. So this is our current range. Now you'll notice, again, this touch point, this touch point, this touch point. We have another little basic midpoint right there. So this is what we want to focus on, just like that, right through here. And we're going to zoom into this now. We're on a 30-minute, now we're going to go to a 5. Remember, this is where we're going to spend the majority of our time, okay, is trying to identify and read price action on this level. Okay, so again, same basic idea. You can see this is current resistance right here. So if price were to break back above this into this level, we would anticipate being in kind of this upper range. So I'm going to give this just kind of some price. Again, what we're looking for is consistency. You can see this price, we traded through it here, we traded up to it, we traded up to it, we traded up to it. Again, it's more of a range than an exact value. So this would be one of the rungs on the ladder. Remember we talked about how this, these support and resistance levels basically create ladders. And you can see same thing right through here, maybe even a little bit lower. But you can see kind of back in this range here, this is our current range right now on our chart. We're trading basically 48.65 by 49.50. So let's say we have basically a $1 range here on a 5-minute chart. Okay. So when we zoom in here and we're getting a feel for what we're looking at, what we want to start to identify is what basically the intermediate trends are, or the primary chart trends are, and what the structure of the market is right here. Okay, so we start talking about market structure. First thing we want to look for is we want to look for potential trends, and you can see we've got this high to this low, and we're basically trading within that range there. So we wouldn't necessarily say that this is on an uptrend or a downtrend, but what we can do is possibly look for some key levels within this using Fibonacci retracement. So if I take this move all the way here and I bring it all the way there, you can see how we're sitting right at basically a 61% retracement. So this has come all the way down, come all the way, you know, up into this range, and now we've pulled back into here. Now, if we're going to read candles on a 5-minute, which we've discussed, I'm going to go ahead and zoom in so you guys can see a big, nice shot here. You'll see how current candle, and I'm just going to take a couple of boxes here. You can see how we've got a high there. We've got a low there. You can see how we've got a lower high here. And we have a lower low there. Now, you'll also notice, and again, I'm just going to do just some basics here. I'm going to do just a real thin box just so you can see the line. You can see there was the midpoint of that candle, and you can see how it basically closed right at the midpoint of current candle. So what we want to see, though, is we want to see higher highs and higher lows of price action before we want to get in. If you come back in through here and see, like here's an example of this candle here had higher highs, higher lows. It closed above the midpoint of current and previous. Could have taken this long right through here with a stop below this low, and you would have had a nice gainer here. Now, right through here, we had a very similar candle right here, higher highs, higher lows, trading above. You would have gotten stopped out here, but you would have gotten another entry basically at the same price, and that would have been a big winner. So remember, it's about probabilities. You're not going to win every trade, but as long as you're being consistent, you're hitting your 70%, 80% mark. With a good risk to reward, you're going to be fine. So if you look at current candle, again, this old candle, the value of the information is gone at this point. So you can see there we have lower low, or excuse me, lower high. And we currently have an equal low. You can see how this has come all the way back down. I'll just move these over so you guys can see it. See how this has come back down to these lows here. So right now it's trading below the midpoint of current, midpoint of previous. So this here right now, you can just get a basic understanding that lower highs, lower lows, we're still going lower. Ideally, we'd love to be a buyer down in this range down here. Let me delete some of these lines off here just so we can look at it. But here is our ceiling right here. Let's change the color and thickness here just so we can kind of see it. So the way I like to put that is we're going to put that as a red just because that's our ceiling. So you can see our big fat ceiling there. And then right down here, here's our buy zone. Go ahead and click on that. Click on that. There we go. So if you were to look at this, this is where you'll hear Dave, kind of make a reference to no man's land. This is, you see how it's in between the two of these? What that means is from a basic primary chart perspective, we are basically a one-to-one risk to reward. Yeah, we could make 50 cents back at the upside, but what are we risking? We're risking roughly 50 cents to the downside. So just keep that in mind. Again, real short-term trades, if you were to take something like this, we'd want to see a complete turn here. And again, we still got 2 more minutes into this candle. So we won't make any decisions for basically the next 7 to 10 minutes and even then, most likely closer to 15 minutes for a potential trade here. on a 5-minute chart. Now, when looking at a shorter time frame, so this again is our primary chart. I'm going to go ahead and delete these boxes. What I will do, though, is I will keep the midpoint line. So you can see on our current candle, or our previous candle, that is the midpoint right there. So what we would need to see is higher highs, higher lows with the close above the midpoint of current, midpoint of previous. That's what we would need to see. Okay. So what we look for on our shorter time frame, so now if we're going to a trigger chart, you can see this is our midpoint of that candle. So we're pretty much trading at the midpoint of that candle. Again, risk to reward 1-to-1. Here's the high there. If you guys go back real quickly, I'm just going to drag this up so you guys can see it. But if I know that that's the high of this, you'll notice if I go back to my 5-minute, you can see how that's where I would need to see price break to give me my trade, because that is the high of both the previous candle and the close of the candle before that. So that level would be an indication of where I would need to see this go or break above for me to take a trade. So again, we'll zoom in here. Here's the low of that candle, high of that candle. I would need to see this break above there, and then we would see a possible trade back at the upside. So let's see what happens here in the next minute or so. And of course, it's going to do it just like it did the whole time I was in training. There we go. Just broke it. See how this goes. Now, if we were to take this trade, we'd be long this on the break, and we would have a stop below the most recent low on a 5-minute. So if we were to go to a 5-minute chart, we would have our stop down here. So I'm going to take this here, and I'm going to draw a box. We'd have our stop down there. We would have entered at 19, currently trading 23s. Now, depending on how this candle closes, our next stop in good money management on a 5-minute would be right here. But as it stands right now, we'd have our stop below the most recent low there. Be long at 19. Ideally, remember how we talked about ATR and getting an average range of price action here. Let me do this. I'm going to put this back up. And what I'm showing you is just how to read candles. This is nothing, you know, there's no oscillators. There's none of that stuff. So there we go. We're long at 19. With our system, we would have made full 10 cents there. So we probably would be out of this already, but still moving higher. Kind of fun seeing it real time, making money, of course. Hopefully some of you guys got that trade. So we're going to take average trading range. Now, what this is this is on a 5-minute chart. And I'm going to zoom out here just so we can get a good sense of it. Now, when the market is open, you can see right through here when the market was closed, ATR was down. But we just want to get an average ATR on this. And you can see when we did this the other day, our average ATR was actually 10 on a 5-minute. Today, there's been an increase in volatility with just a lot of the price action that we've had the last few days. So now we're having an increase in volatility here. So on a 5-minute, our average ATR is 15. Okay, so what that tells us is in this particular trade, we would probably be trying to shoot for more of 15. So if we got in at 19, we'd be looking more for like 35-ish on this current move. But we'll see how it plays out. Now, again, we've only been in this trade for a minute or so, which we're going to talk about in just a second. So on a 5-minute, if that's kind of my one chart time, now let's go to a 30-minute. And we're just getting a range of ATR here. So basically 15 by 25 is our range on ATR. If you notice, I came back here and I'm going to zoom out here. And we're just trying to get an average. So what you'll normally do is you'll just take the peaks and valleys of the ATR here. So you can see how it creates kind of these peaks and valleys. You just want to get an idea of kind of the range or midpoint. So 30 actually, so a little bit higher than where I said 25. And this is exactly why when we trade, we set those limits to, you know, if we're going to make our 10, we're going to make our 10. So we had a trade at 19. and it traded as high as 31, so we would have made our 10 cents just in that one candle. See how it's trading back below it? This is an extremely bearish candle, which we'll show here in just a minute. But if I were trading this, my average length of trade would be anywhere from 5 minutes to 30 minutes, and I'd be looking for an average of 15 to 30 points would be kind of my range, or in this case, pennies or cents or whatever you want to call it. So let's go zoom in, though, on a 5 minute or 1 minute chart and kind of look at this price action, because you can see we had a nice little move up, and then in one candle we had a big swoop lower there. Once you have ATR in there, you don't need it. You can just close it down. So we're coming 1 minute into this candle here, so we've got this 5 minute candle is about to close. So that's where you don't get wishy-washy around in any one candle. Your stop would still be here. You'd still be long at 20 if you, depending on where your profit target was. Again, we look for 10 cents, so we would have already been out of this trade. We'd have been done already. Let's see how long that trade would have been. Would have been long in this candle here, 19. We would have been out. That would have been a 2 minute long trade. 2 minute long. Next candle is going to print. There we go. So let's read our current candle here. So the way we would adjust this now is our stop now would be below this low. Okay. But notice if we were to move this here real quickly, you can see you have higher lows, higher highs on the candle, but this didn't break the midpoint of the current candle. So if you take the low of this candle, and again, just real quickly, if you want to get an idea of the overall price action there, if you look top left corner over here, open, high, low, close. So we're just going to select there right on that candle. And if you look back up in that top left corner, you can see that the high of that candle was 49.31. And the low of that candle was 49.12. That gave it a range of 19 points. Okay, so basically 10 points off the low. So 49.22 was the midpoint. So you can see we closed at 49.21. So we closed below the midpoint, pretty much at it, but still, I mean, we would have liked to have seen it close closer near the highs here. It didn't happen. Now let's see how this candle forms. Now initially, in the beginning portion of this candle, we're seeing a lot of price action towards the upside. Now, the way that I always like to read candles is I don't really care as much. In a 5 minute candle, I don't care as much about the first 3 minutes as I do the last 2 minutes. That really does give me kind of an inclination of what it's going to do. And you can see now, you have a lower high here so far forming. Let's see how it interacts with these lows. But see, you have lower high, higher low. Right now it's trading near the lows of current, lows of previous. So consolidation is really what you're seeing here between that bigger candle. If you'll notice you have a lower high, higher low. It's kind of creating, and I'll zoom in here on a 1 minute and you'll see the kind of the wedge forming here. You can see how you've got this forming just like this. So that would be some call it different things. I mean, people will call it pennants, people will call it, wedge, people will call it all types of stuff. So pretty much just means that you're seeing it consolidate back into this point. So by the time it gets to right here, which is 10 o'clock, you're going to have seen this thing break out one direction or another. Is really all that's saying. Go and delete this. Go ahead and delete this. So now if I'm looking at this for a trade, let's go back here. Possibly even as low as there, as high as there. To see this follow through now on this candle, we would need to see it take out that high. And what will happen again is we'll see an additional increase in momentum here. Remember I told you I care more about the back half of the candle than the front half of the candle on a 5-minute? This is why. There we go. We just broke that level. We're going to head back up into this range here. This is also the reason why we don't focus so much on the 1 minute, because there's just so much noise there. So we broke above that high. We want to see this candle continue to impulse here. A real strong move would be at closing above the previous candle there, a 40.31. We're going to go ahead and put in here a little annotation here. So what we would have here is our stop would be below this low there. And here's the high. So again, what we have is higher highs and higher lows. Brand new candle. What we would want to see here is we'd want to see a higher high, higher low. So what would be the midpoint? Let's go ahead and count this out here. What would be the midpoint? If you take this particular candle, the high of that candle is 34, 49.34. And the low of that candle is 49.15. So again, another 19-point range. So the last two candles we've seen two 19, basically 20-point candles. So 49.34 minus 10, 42.24. So what I'm going to show you here is I'd really like to see this thing stay above the midpoint of the previous candle. If I were in this trade, that midpoint would be my decision point. Okay, so we're going to take this candle here and we're going to put our little box right here, which is the current low. That doesn't mean I think that's where the low is. I'm just using that as it stands right now. That's the current low. And this is the current high. So if you look at this, you currently have higher highs and higher lows, and it's trading at the midpoint of current, but it's still above the high of previous. Remember, this is our midpoint here. So if we were in this trade, we would still be long. We would still be in. What would we like to see this do? Again, we have 4 more minutes. We'd like to see this thing trade and close above here. Remember, the first 2 or 3 minutes of a 5-minute candle I could really care less about. Doesn't mean anything to me. Now, the only thing that would mean something to me would be how it interacted with these levels here at 24. So you can see it went 1 cent lower. Higher low, higher high. Yeah, it's just kind of just chopping back and forth here. That's why I don't want to get washed up into this whole thing. Now, the one thing to consider in looking at this particular chart, this is where you're going to start getting conflict. As you can see, we had a drop, a rally, a drop, a rally. You can see short-term trend is down. But then if you come out here a little bit over the, basically since 6 o'clock this morning, the overall trend is up. That's where you're getting this conflict right here. I'll just draw this for you so you can see it. You can see there, right there, we've got an uptrending support level here. But then what you've got here, let's go. As it stands right now, you've gotten, kind of these decreasing highs. See how it slopes down like that. Important to see how this is going to interact here in the next few minutes. Now, another thing that we like to use study-wise is we like to use Bollinger Bands, because Bollinger Bands, what they are is they basically take the average price over, this is a 20-period time frame, and it looks for volatility of price. So you can see when price gets extended above or below the Bollinger Bands, it tends to revert back to the mean, which is the midpoint. So we're just going to do some examples here and just kind of show you what we mean by that. You can see here where it traded outside. You can see here where it traded outside. See here where it traded outside. You can see here where it traded outside, and see how they all end up reverting back to the mean. Here it traded outside. Here it traded outside. What a lot of guys will do, though, is they'll say once it trades back inside the Bollinger Band, like right there, that would be the trade. It traded outside the band and closed inside the band, that would be the trade. Closed outside the band, then closed back inside the band, that would be the trade. Here the trade would have been right here, this particular candle here as it pulled back. So you do have to be careful with it, though. Like right through here, you'll notice, see how the Bollinger Bands get very narrow here? I'm just going to do this. You can see right through here where they get very, very narrow, right through there and right through there. What that does is very similar to the pattern we saw over here, where it just, in a sense, wants to break out. You'll notice that's where the increased volatility is. But this was pre-market. This was overnight, so that's why you're not seeing any major movement. All right, so let's go read our sentence here on our candle. If you look at what we had here, you had a higher low, higher high. We're still above the midpoint, but we want to see how this candle interacts. We want to see this candle put in a higher low, or we already currently have a lower high here. So we want to see how this candle is going to interact with these highs. Now, one thing you'll learn about impulsive candles is an impulsive candle tends to trade the same direction for the full 5 minutes. Now, it'll flutter back and forth, like this candle's fluttering back and forth, up and down, up and down, up and down. But it's remaining black pretty much the whole time. So there you go. You just put in a higher high. Again, we want to see this thing close above 35 for us to really get some good conviction here. And what you'll hear, and you've heard me mention this before, Lucky Larry says it all the time, it's an acceptance of price. That if price closes above 35, that old level of resistance, which was right there, would act as a new short-term support level. So we're headed back up into the into our 40 range here. So I'm going to delete this. Delete this box. So you see it from a risk-reward standpoint. Let's delete this too. That's just our midpoint. You'll see this from a risk-reward standpoint is we know that every single time we've gotten up into this range, we've had a lot of sellers. So think of it like resting or pending orders out there. There's just a lot of overhead, a lot of people out there that are selling when price gets up into this 40, 49.45, 49.50 price. So that was our old level of resistance. So you have these lower highs and lower lows on the short term. We want to see how this interacts. Right now, we still have a lower high here. See how we had this breakout? This is why I always trade the back half of 5-minute candle here. Because until this thing closes or stays above here, this is actually a very bearish candle. Right? It tried, hit some overhead selling, and now we're seeing a sell-off. A lot of people will get suckered into this trade, including me a few times. Again, though, we were long right through here at 19. So we'd be up, $100 right now. We would have been up as high as 300 on this one trade per contract. Now, what I'm going to do, I know we're focusing a lot on crude. I'm going to go ahead and change this up. We're going to go ahead and go to the S&P. Again, we're going to start with just a brand new fresh chart. You may be asking why I'm doing that, why I'm taking everything off. The simple truth is the most important thing on any chart is price. So indicators, all that stuff is there to, you know, what they use for basic confirmation. But end of day, you know, price action, price and time correlations are going to be crucial. So you'll see back through here, here's some of our basic key levels right through there. We've traded as high as here, but I don't necessarily think that that's, I mean, if we want to take it, this is where I'm struggling, is because I see kind of my key levels for right now right through this range. Now, if we traded higher, yes, but to me, this data up in here is pretty irrelevant at this point. But we do have a level there. My midpoint, again, consistent points of data. We've got through here, all the way through here, all the way through here, all the way through here. That would be my midpoint. So I would come in right through here and drop. Just like that. You can see when I zoomed in, I've got these highs over here to the left, these highs, these this support, this resistance. We're trading above that now at the open. We came back to it in a pullback here. Pretty bullish on the S&P. So with that having entered its new range here, this would be my new range on the S&P, these levels to here. These levels to here. So let's zoom in here and take a look at these candles. See what we're seeing. Here was the ramp out of the gate. If you remember on the call, Dave kind of called out a few numbers. He was dead on the NASDAQ. So I don't remember what the S&P numbers were, but I'll try to get those by the close and get a better feel for that. Okay. So you can see currently you have lower highs, lower lows. We're testing lows of current, lows of previous. So I'm bearish right now on crude, even though the overall trend is up. Now, what I would do, we would basically want to take the current movement that we're in and just try to give us some other key levels and see if we can find some support through here. So you can see we pulled right back to this level. So this would be our current support level, it would be right through here. Remember what we look for when we start talking about the actual trades. We need to see a pivot. This candle right here could have been considered the entry pivot with the stop below this low. Now it's traded a little bit higher. That was at 20.59 1/4. It's traded, you know, basically a 1.5 up. So we would still be in this trade if we were long this. But nice impulse versus corrective wave. It's probably going to channel sideways for a while. It's where it's going to work itself out over time. But overall, looks like this support level is going to hold. This is kind of a key level, though. Some of these lows. If this breaks, it's going to fall back into this area down here. Yes, I will do a video on the fibs, Jerry, showing you guys how to pull those. I'll work on that today. One of the things I'm going to go over, though, too, we're going to one of the major topics of conversation is going to be probabilities in this next section. We start talking about trades, because a lot of times people will say, well, my trading system is 70% probability, blah blah blah. We're going to talk about basically 3 types of probabilities. So, and how they basically work in a way that relates to trading. So, I'll give you guys just a basic example of one of the ways that we're going to talk about probabilities, just on in general. So the first thing is let's say you had a quarter, right? And your quarter wasn't a trick quarter, and so it had a head and a tail, heads and tails. And the idea was if you were to flip that quarter, the statistical probability is that it's going to be either heads or tails 100% of the time, and it's going to be one or the other 50% of the time. Now, some people have argued, and I've heard this argument in the past, that because of the amount of yada, yada, yada on the side of the face, that it's 51-49 if you did a million flips or whatever. I don't care. It's 50-50. You know, whatever you want to call it. 51-49, maybe a little slight advantage, but it's pretty much 50-50. So if before you started flipping a quarter, okay, and you said, I want to flip 10 heads in a row, that's going to give you a probability. And let's say that probability is, and you can actually mathematically figure it out. And the way you do that is if you take 50% and you divide that by 2 and 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 divide that by 2, that all the way to 10, that gives you the probability. So if you take 50 and you divide that by 2, so divide that by 2, divide that by 2. Let's see what it is. So 50 divided by 2 is 25. Divide that by 2, it's 12.5. Divide that by 2, it's 6.5. 6. Divide that by 2. It's less than a 1% chance. My system errored out at 1.9%. Okay, and that was like 6 flips in. So statistic probabilities. Let's just use 6 flips. The statistical probability of flipping 6 heads in a row is 2%. Okay. Now, what's the likelihood? Now we know that that's before any flips have occurred. But let's say you flipped 5 in a row and it was all heads. What's the likelihood that that next flip is a head or a tail or head? It's 50-50. Because every single time you flip that quarter, there's a 50-50 likelihood that that's going to be right, or that it's either going to be heads or tails. Now, before you started flipping, the probability was 2% that you would get 6 in a row. But the probability was that if you had already flipped 5 in a row and you flipped, you have a 50-50 chance of it being a head. Now, why is that important? Psychologically, the very first reason is if you have a trading system and you know that your trading system is 60% or 70% or whatever, if you miss trades, meaning you don't take trades for whatever reason, you can throw probabilities out the window. Because the one trade that you don't take could have been a winner, and that winner helps offset some of your other losing probabilities in your trade. So if you know that your system is going to be right 60 out of 100 times, you're going to have 40 losing trades and 60 winning trades, and you know what your risk to reward is. So let's say it's 1-to-1. What that means is that over the course of 60 trades, you're going to make, let's say you make on 60 trades, let's say you make $6,000, and on your losing trades you lose 4. You still have $2,000 on 100 trades. Now let's say you miss some of the winners, right? Let's say you don't take them even though your probabilities are there. You can see how it just skewed your whole probability system. Your probabilities no longer matter. You can throw them right out the window because it doesn't make any difference if you do that or not. Now, another thing that will skew your probabilities is changing your trade size. So if you do 1 contract on one trade and you do 5 on the next, if the trade that you did that was a 1-lot winner versus a 5-lot loser, it doesn't make any difference. You basically are making it. And one of my students, when I taught her, she used to trade Google, and when she traded Google, she had a trading system that was 87% accurate, and she still lost money. And the reason was when she traded Google, she'd make $1, but then she'd lose 10. So, as Lucky Larry likes to say, eat like a bird and poop like an elephant. That's the big thing with trading, is staying away from the big blow-ups or the big down days. And again, a lot of that's just human emotion. Okay. So if you look at this current candle, This would be a pivot if it were to close here. Again, we still got 2 more minutes, but let's go to a 1 minute here real quick. And let's look at this. Now, again, if we're liking the breakout, we would take the break of these highs right here. You can see how we're trading back up there. And this is where you're going to see a level of increased momentum as if this breaks that 2060 price. But you'll notice how we're just trading right through this real short, choppy range. Not a lot of price action. So we'll just see how this goes here. Now, in comparing this, so let's change this back to a 5 minute here. Equal low, higher high, trading above the midpoint of current, midpoint of previous. We like this as a possible trade. We'd love to see it close above the 2065 to confirm, though. This close near these highs here, the greatest likelihood is it's going to break those highs. So that, in a sense, that would be a trade there. We would have a stop below this low. So we would be long at 2060. Just based on the candles. Even though it's just dead in the water, it's not moving. Again, where we're going to see our momentum is when it breaks this level right here, this 2075. So see how we're working our way up to that level? Price is wanting to get back up there just to see how many sellers we have. And start absorbing some of those sellers. So think of it like real estate. So up there, that's a price of a house, and there's lots of people up there that are waiting for that price of the house to get there. Once house prices get up there, then the market's going to get flooded with sellers. And you just hope that you've got more buyers than sellers to offset all that to suck up that inventory. That's what we're seeing here is the price is just drifting back up into those highs. So buyers are accumulating all those overhead sellers up there. I want to see if it's going to break. If this breaks here, this level here, we're probably going to see it trade back up in this range. Another thing you can do too is once you have an idea of a pivot, what I'm using now is in Fibonacci extensions. And what this does is this just kind of helps tie into some additional levels and just to see if those fibs are pretty accurate. You can see right up in there, that's a good example. So if this move, we were to have an equal move to that move, it would put us right up back into our box. So see how price is going to go here, see if it's going to break. Keeps trying to. We would already be long on this with the stop below this low. So from a risk perspective, we'd be in at 2060. We'd have a stop at 20, basically 58. You know, we're risking a 1.5 here to see what happens. If this breaks, we should see it back up into this level here. Now it may trade up, pull back, and then trade higher. It may not do it in, you know, straight up, but we want to see if this is going to break. When it does, that's where, remember we talked about those increases in momentum. The larger the break of a previous high, the more momentum you'll see. So if this 5 minute momentum breaks, you're going to see a movement higher. Typically it's at an ATR higher. So if we were to go see, we could go find out what an ATR is on the S&P, but it's typically 2 points. So you typically see this thing get up into this range here in that one move. You can do it. Hanging out near those highs. Now this is where this becomes more crucial because now we're on the back half of this candle, this 823 candle. There we go. We just took it out. See if it closes. Traded above it. We like to see it break. We're not seeing a ton of momentum though. We'll see more of a push on that break. See if it'll give it to us though in the next minute. Technically, it traded above it. We want to see it close above it. You go to a 1 minute. Let's go to a 1 minute here and just get a feel. See, I was just kind of drifting into that level. I want to see a big candle like that when it breaks. Just don't have any sellers in there, that's all. There we go. Now they stepped in. See how the sellers are stepping in there? See if these buyers are going to hold out. We're going to go back to crude too. S&P is just so slow. It's like watching paint dry over there. Let's see what crude's doing. Look at that guy. I love it when I get Skypes from people and they're like, I got to make up because tomorrow the market's not open. That cracks me up. So again, if we're coming back and looking, we were looking at buying in here. Remember how we had lower highs though? You can see how we put in the lower low. So right through here, when we started seeing this weakness through here, this is a good indication that this was going to push lower through here, right? We didn't see this. Now again, did we take a trade back through here at 19? Absolutely. Did we make our money? Yeah, this thing went to 40. But look at the big push. Now that's the other side of when you're looking at trades is when this dropped through here, how far did it fall? It fell, let's call it from 90 to the low here of 30, right? It fell 60 cents. From the low here, let's say 30, it rallied to here. It rallied 20 cents. And then it dropped from 50 to there. It dropped 50 cents. And then it rallied from there to there. It went 30 cents. And then it went from 49 all the way down to here. It fell. That's almost $1 right there. Okay? So you can clearly see the momentum of that drop. Now let's zoom out here and let's get a feel for where we are in overall reality here. Let's take a look. Nope, not with that one. We're back at those key levels again. Remember how we had that drawn before? Came down and retested it. See how we traded outside the band? Now we're trading inside the band. Now you see we have lower highs lower lows, but we're trading at the highs of current, basic midpoint of previous. This could be an indication that we could be coming into a bottom here. Now, we don't know this yet, but this could be one of the things that will kind of give us an indication here. See how this holds. Hopefully this has been informative, guys. Kind of different to have it myself. I'm used to having Dave over here telling me, dropping all his knowledge. You guys got me by yourself today. Getting some buyers in here. So, all right, guys, well, have a good day. We're going to go ahead and wrap this up. We'll see you on the wrap-up call.